Hello, should I avoid stocks with high volatility? Not necessarily. It could depend on the swing trading strategy you are using as well, and not necessarily vola- um, avoiding stocks with high volatility forever, but for the first year of you swing trading, you can stay clear of those. Again, depending on the swing trading strategy you are using. For long option and swing trading strategy that I use, I stay clear away from high volatile stocks. And the way I try not to trade them is by trading large cap stocks. But I know that once I'm comfortable swing trading and I test my strategy, manually customize it, based on the stocks that I'm trading with it. I use those large cap stable stocks to test my strategy and improve my strategy. I can my experience from that, I can try to apply it to small cap stocks that can be a little bit more volatile than large cap stocks. I can apply it to mid cap stocks that are less volatile than small cap stocks, and pull growth stocks from those market capitalization that I can safely swing trade. So that is the way I'm going about it. So it's not about avoiding those type of stocks forever. Over time, based on your risk tolerance, you can allocate a small portion of your capital toward those type of stocks if you like to give them a try, just knowing that the higher the risk, the higher the reward. But you have to know how much that risk is costing you to see if the reward is worth it taking that risk. So, it's not um, a clear decision. It's a decision you have to evaluate to see, you know, you are just going to try to make the right decision and hoping the outcome will be a good one. And you'll keep improving as you go along. Your swing trading strategy is going to evolve over the years. Make a long life journey out of it, a part of your income making strategy, and not viewing like something you have to set up now and that's it. But as you are working, making money, learn how to manage that money by making a portion of that money working for you. Put some of your money to work on the side along with your day job as well. Is a part of the way you are, managing your money. So it, you are going to evolve. Your swing trading strategy is going to evolve. For now, start learning it to be comfortable with the stock market, knowing that you cannot just have a day job or a paying job, and that's it. You need to have some other ways of making money by putting some of one way will be by putting some of that money you are making work for you. And that is where swing trading is coming from. The way I swing trade is not actively trading. Again, is my swing trading evolving. In 2024, I traded often. I swing traded often. 2025, I extended, and 2026, I'm extending even more, knowing that when I buy stocks, it could take me months, even a few years before I sell it. Today we are going to analyze TPL, and today is January 29, 2026. And looking at TPL, for instance, we have our support line passing by the valley of the chart that we like to buy the stock at, and we have all-time highest price that we like to sell it after. So swing trading, the way I view it, the way I'm trying to do it, is investing in the stocks, but buying and selling so that I can lock in this growth away from the valley line instead of letting my money growing steadily along this valley line. I like to lock in those growth away from the valley line by buying it around the valley line, selling it around the peak of the mountain, and where to buy again at the valley line, and choosing growth stocks to work with instead of level stocks to work with. I'm willing to pay a higher price than what I paid before, as I'm buying along this valley line that is uptrending. That way I know that my money is growing, along this valley line, but at the same time I'm selling the stocks, locking in this growth here. That is the way I'm viewing swing trading. At least that is the way I'm shaping my swing trading strategy with my investing strategy, because I'm more of an investor than a trader from past experience of trading, buying and selling stocks. And I'm trying to see the good from swing trading, the good from investing, and trying to design a swing trading strategy that is pulling my knowledge from both sides into one. So I'm picking stocks that I'm going to be swing trading over and over, because they are stocks that I want to invest in long term, but I don't want to buy and just keep it there forever. I want to sell it, rebuy it, sell it, rebuy it. And this process is about testing my strategy with them to see which one I need to take out because they don't work, they don't work well with the strategy that I'm using, and which one I can keep in the stocks, which one grow faster, and which ones grow slower. So I try to have two lists here, these that are called more short-term investment, because again, I say short-term because I don't want to invest in them forever. I'm going to swing trade them, but I know that it will take me a few years before I'm able to sell it because of the slow growth they have. And this list I want to keep here, the one that have quick growth in them. And the way I view them is having all-time highest price to be in the current and previous year, and no more than before the second year, if that makes sense. Like have all-time high within the past 3 years. That's what I want. And that shows me that yes, it's growing, reaching higher mountain, within 2 years, meaning it's going to keep going higher and higher and higher and higher for about 2 years, and take about a year to come back down to the valley, and then go up again, reach all-time highest price within a year or two. When I say all-time highest price, like when it's done climbing up and wanting to come back down, could be about a year or two, and then take about a year or less to come back down to the valley. So having those quick growth, yeah, those stocks are great to swing trade because you can buy them and sell them within the same year or the following year or so. So I'm trying to have a list of those stocks and have a list of the stocks that are slow grower. They will be less volatile, but in general, I call stocks from large cap that I have on my watch list less volatile in the sense that when they are going in one direction, they don't go there overnight. They takes their times to get there. That is the way I understand or I interpret volatility. This another way is when you are looking at those bar, some of them are long, but most of them are small. Like this is maximum daily chart, so every single bar is a daily bar. So therefore, you know, the low and the highest price for every day is now most of the bar are this tall, if that makes sense. So I call that low volatile stocks. Another way I view those stocks that are on my watch list is when I take TPL, in my opinion, is now the time to buy. And why is that? Is coming from all the peak of the mountain going to the valley, but it has not reached it yet. Keep in mind that some stocks don't really reach it before they'll start going up though. But since it seems to touch it in the past, I'm thinking it's going to touch it again. So since 2024 is going down and it has not reached that valley line yet. So it's taking time to get there. So that to me is a low volatile stocks. It will take some to get there, and when it gets there and it start going up, it's going to take time to get there as well. So when you are seeing it here, when it left this valley line, in fact, I will say it left it here because when it reached all-time highest price here, the next time it reached it was here, and it started reaching it along that journey somewhere here. So it reached the valley line here, went up a little bit, but then pulled back. So here is the beginning of the cycle, the way I view it, and it originated in 2023, and it reached all-time highest price and down with it in November 2024. So you can see how long it took for it to be done climbing that mountain. I call that low volatile stocks. And then it's taking about a year to come down. So those are type of stocks that I like to swing trade, and it has good growth in it, but you know, it's not like reaching from the valley to the highest price is now within 1 month, you know. So it could be within a year or two. And so therefore, if you are trying to buy and you don't analyze your stocks on a regular basis, you can still catch it. One might buy here, maybe you didn't find it there, but you found it somewhere here. Months later, you can still buy it. Or maybe you didn't even find it until around here, you can still buy it. Does that make sense? Because where it's coming from, around here is coming from the valley line. Well, here is coming from the top of the mountain. So knowing where it's coming from can tell you if reached the valley and start going up, or if it's on its way to the valley, for you to make the decision if you want to buy it, if you can get on the right, on the right. So because it touched the valley line in the past, I'm expecting it to touch it, and right now it has not touched it yet. So therefore, I'm not going to buy. So that is the way I do my chart analysis. Thank you so much for watching our videos. We thank you for your time. Thank you for all your comments, and we thank you very much for subscribing to our channel. I'm Afiavi, Liberman, creators of Liberman Consulting L.L.C YouTube channel, and in sub.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just start small and grow your accounts from there. For more videos in this series, will you please check the playlist in the description of this video, how to start swing trading using step by step using long uptrend line. And we do have other swing trading related playlists in the description of this video as well. Thank you. Happy swing trading.